Today, on CEF Investors, we are going to review the Gabelli Equity Trust, ticker symbol GAB. Is GAB right for you? We can answer that question in just a few minutes. We are going to look at the fund's purpose, ratings, performance, dividends, holdings, and NAV. At the end of the video we will sum up what we have learned, and give GAB a grade in the top categories. If you like information about closed-end funds, then please consider liking and subscribing to this channel. But first, the legal stuff. I am not an attorney, accountant, or financial advisor, and the information supplied in this video is not intended to provide financial or investing advice. Please speak with a qualified financial planner before making any investment decisions. A fund's past performance does not necessarily predict its future results. Any investments the author has in the reviewed fund will be fully disclosed. The resources used in this video are from publicly available websites and may or may not contain accurate information. Now, let's get started. The Gabelli Equity Trust is a closed-end, non-diversified management investment company, whose investment objective is long-term growth of capital, with income as a secondary objective. Investments will be made based on management's perception of their potential for capital appreciation. The fund seeks out undervalued companies with greater than average potential for growth. The Equity Trust maintains a 10% distribution policy, whereby the trust pays out to common shareholders 10% of its average net assets each year. This distribution is paid quarterly. The distribution rate is not representative of dividend yield or the total return of the fund, and may include a return of capital. The first thing I like to check when researching a fund is what do the experts say. Let's hop over to Morningstar and get their rating. Morningstar assigns star ratings based on their analysts' estimates of a stock's fair value. A 5-star stock is a good value at its current price, a 1-star stock isn't. Star ratings, which are updated daily, can change for 3 reasons: because analysts alter their estimate of a stock's fair value, because a stock's price changes, or both. Ratings that change because analysts alter their estimate of a stock's fair value are marked with the asterisk symbol. Morningstar has rated GAB as 2 stars, that is below average. The next place I like to check out is The Street. On The Street's website they say that, unlike many other rating agencies, they analyze both fundamental and technical risk factors. They use more rigorous standards for accuracy to support their foundational belief that a good investment should be able to perform well, regardless of the direction of the overall stock market. The Street gives GAB an investment rating of B+, a performance rating of B+, and a risk rating of C+. Positive factors that influence this rating include a well above average total return, low price volatility, and low expense structure. The fund invests approximately 99% of its assets in stocks, and may be considered for investors seeking an equity income strategy. And last, let's look at bar chart. Bar chart opinions show traders what a variety of popular trading systems are suggesting, in terms of going long or short the market. The opinions takes up to 5 years worth of historical data, and runs these prices through 13 different technical indicators. After each calculation, the program assigns a buy, sell, or hold value for each study, depending on where the price lies, in reference to the common interpretation of the study. Bar chart says that GAB is a buy. The bar chart technical opinion rating is a 40% buy, with a weakening short-term outlook on maintaining the current direction. Now let's check out this fund's performance. Total return takes both capital gains and dividends into account, in order to provide a complete picture of how a stock performed over a specified time period. This can be extremely useful for evaluating investment returns among dividend-paying stocks, and for comparing the performance of dividend-paying stocks to those without any dividends or other distributions. According to Seeking Alpha's website, for the past year, the total return for GAB has kept pace with the total return of the S&P 500, which is good performance. Due to the current volatility of the markets, the total return is currently even with the S&P 500. Seeking Alpha also shows that the price of GAB for the last 5 years has had steady growth, starting around $5, and steadily increasing to the $7 range. Continuing on, let's check out the dividends. Dividends are payments a company makes to share profits with its stockholders. They are generally paid on a regular basis, usually monthly or quarterly, and they are one of the ways investors earn a return from investing in stock. Again, according to Seeking Alpha, the dividend yield currently is around 10%, which is excellent. Also, this fund has raised its dividend for the last 2 years, which is also an excellent sign. If we look at the historical yields, we can see that for the last 5 years, the yield has generally been between 8 and 11%. All in all, for the last 5 years, this fund has had very stable price and yield. Before we look at the holdings of this fund, let's find out what sectors are performing well. Comparing the sectors of our fund to the sectors that are doing well can give us valuable insight. Over at FinViz we can see, for the last year, that the top 5 sectors are energy, financial, real estate, industrial, and basic materials. Now let's see what holdings are in our fund. At Seeking Alpha, we can see that the top 5 sectors are industrials, financials, consumer defensive, communication, and consumer cyclical. You can see that this fund is focused on 2 of the top 5 performing sectors right now. The top 10 holdings are some well-known companies such as U.S. Treasury bills, Swedish Match, MasterCard, American Express, Rollins, Deere, Berkshire Hathaway, Ametek Texas Instruments, and Honeywell International. What review of a closed-end fund would be complete without a look at the NAV? Over at CEF Connect, we can see that for the last 5 years, this fund has traded at a premium. So if you are the type of investor that always wants to buy at discount, then this fund is not going to be for you. And as full disclosure, I currently own 100 shares of GAB, and will be looking to add more to my portfolio. This fund fits into my investment goals and strategy, as a solid performing, good paying dividend fund. So is GAB a buy for you? Let's review what we have covered. We have 2 different sources giving GAB a buy recommendation, and 1 giving a below average rating, so let's give this fund a B for ratings. Since GAB is keeping pace with the S&P 500, we need to rate this fund as an B for performance. Anytime a fund can pay steady dividends between 8 and 10%, you would need to give it an B for dividends. After reviewing the holdings and the main investment sectors, GAB should get a C for holdings. You can see that GAB definitely has some things going for it, but may have some drawbacks for some investors. Maybe GAB can meet some of your investment goals and strategy. Well, that wraps up this episode. Thanks for watching. If you found this video helpful, please consider liking, subscribing, and clicking the notification bell. Thanks, and we will see you next time.